Right, let's get started. Welcome everybody. So uh, this might be your first Pro Trader webinar here. Reason being is this is the first time we've had Thor uh, present here over on Bookmap. It is in Discord only right now. We will do it and we'll um, uh, release it another time, but we want to bring you into our Discord, show you around our Discord a little bit so you get a feel for what's going on in here with our community. And we have been trying to get, or not trying so hard. I mean, Thor, you were so willing and eager. We've been wanting to have you for quite a while in here. So very, very happy to have you. You're going to go through how you the market and the order flow, understanding the order book, the VBA, the pivots, and then you'll describe this employing the where, when, and how trading methodology. Just a bit of background here towards Thor's trader biography. I'm trader. Uses it as his primary source of income, trading for 6 years and consistently profit for 5 of them. A moderator at the Bear Bulls trading community and trading stocks and futures live every day. Specializes in growing small accounts and developing new advanced traders with his mentoring team at the Pivot Masters. And then recently published a book as well on Amazon, a complete day trading system. So you can go and check that out. I also have his contact information here. I'm sorry. Here we go. We have the, oops, let me go back here. The contact information here. So on Twitter or X at Thor Young, then we've got a couple different emails, Thor at Bear Bulls Trader, and you can use a promo code 50 to save 50%. And then you can also email him for trade coaching information here at info@pivotmasters.org. And you can find his book on Amazon as just previously mentioned. Go through the disclosures and then we'll turn it right over to Thor and let him take it away. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only, should not be considered specific investment advice nor recommendations. This disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for investors. Past performance is not necessarily indicative of future results. Thank you so much, Thor. A real pleasure to have you here. Let me present your screen and then we can get up and running here.
Awesome. Thank you so much. And thank you very much for inviting me to come. I've been a big fan of Bookmap and I've been using the software for quite a while now. So I was kind of like hoping I would be asked to come hang out someday and talk with your community. So when you, as you mentioned, when you reached out, you didn't have to twist my arm too much to get me to come in. I'm really looking forward to talking to everybody about this great program, Bookmap, and talking to you a little bit about how I utilize it in order to help me put together some good trades today. So appreciate that, Bruce, and thank you to you and Bookmap for having me here. So I'll go ahead and just kind of dive into it. I do want to say as we're going, as a day trader, I actually am in day trades currently right now as I'm beginning to present for you. So just want to keep it in mind that you are going to be seeing me talking about live trading, exiting, and entering positions. Right? Remember that this is my trading system and my trading style. So emulating any of those trades without an understanding of how to use it could be detrimental. So just keep that in mind as you're making trades, that anything you do should be done of your own accord and treated as such. So as we move forward and go into this whole thing, as you can see, I've got my screen up here. I have Microsoft pulled up here, and I'm actually short on Microsoft, and I'll kind of talk a little bit about why in just a moment. For those of you who use Bookmap, you'll probably notice that the CVD is quite green, so it would appear that we're buying more than selling. However, if you're looking at the order book, you can see there's a really big buyer to the downside, and our sellers to the top side are breaking apart. So my idea, because I use a Camarilla pivot system to trade, because we're in a lower range, I'm generically looking to short this area. And since I'm finding, since our buyers can't lift the price here and our sellers cause the price to drop, I'm more biased into the downside. So now, as we're starting to approach this, I wanted to kind of give you all a little bit of a history because we're going to be together for like an hour, maybe a little more. So I'm also need to get. I got the chat pulled up. The chat pulled up. So in a few minutes, I'm perfectly okay if y'all ask me questions in the chat. I'm really big on Q&A and stuff like that, so we can start talking about stuff as well. So about me, I started trading 6 years ago, like towards the end of 2017, actually, and I started trading up through. I'm actually started with a momentum trading style, and really started moving forward. The big change to me in my trading came when I actually got to spend a good amount of time on the NYSE. And got to build some really close friendships and relationships with a lot of market makers that are on the NYSE. And it was a really, really beautiful experience, and getting to see really how everything works. So when I talk to you about like what the market makers are doing and motivated and how those things work, when I'm bringing those things up, I'm not talking about information that comes from a book or anything like this. This is just how this kind of stuff works, and that's firsthand experience from actually being inside the NYSE and watching these orders getting placed and kind of what motivates these guys. So after that happened, what I realized was that the market is made for institutions. What a lot of retail traders don't realize is this market was not made for us. We're kind of like invaders in somebody else's world, right? Retail day trading itself really didn't gain major prevalence really maybe until the past couple of decades, right? I mean, the round trip on commissions plus the ability to actually trade, have a position. You got to think 20 years ago, PDT, right, being $25,000 was significantly higher. Like PDT today is relatively small, right? It's still 25,000, but thanks to inflation, 25,000 isn't what it used to be, is it? Right? Back when, in the 90s, coming up with 25 grand to fund an account was actually a pretty big deal. Hey, Kibera, how are you? Good to see you. It was a real big deal, right? So we really have to think about that when we're looking at the market. Is that the market itself is an environment that was made for institutions and for large pension funds and right on large pension funds and people like that to be able to facilitate movement of shares back and forth between large order to large orders, and those things are going to happen with or without us, right? Retail has very, very little influence over the overall directional movement of the market, right? Can someone write out where he got to meet market makers? So Mr. No Luck, we got time. So it was around COVID. And my boss at the time, Andrew, or still still work for him, Andrew, Bear Bull Traders, he got invited to go to the NYSE, and but because of all of the COVID stuff, all of the guys that were coming in from Canada, so that was Andrew, Artie, we got time, Brian. Sorry.
No, nothing.
Okay, I thought I heard something. So it was like COVID time, right? And so all of these guys weren't able to come in. So here's little old me in New York all by myself, right? And I get to spend two days on the market as the guest of Peter Tuchman, and just got to walk around that. I've been to the NYSE now as his guest or somebody else's guest maybe a dozen times at this point. It's they have a nonstop from Jacksonville to New York, so I go up there like once every few months. Because I've made some really good friends up there now. But yeah, it was an amazing experience getting to walk around and actually see what they're really doing, to understand when you see that buy order that happens up high off of that large seller, and you go, who would buy that and how did they know? You actually know who bought that, and you know how they knew, right? They knew because there was a conversation they had, and they had already predetermined that someone was going to be buying that large order. Right. So what we're looking at right now, and I'm going to kind of flip into Microsoft here. So what I do when I'm looking at the book, and then I'll flip back to some of my experiential stuff here. This is relevant in the moment for y'all. It was amazing experience for sure. And I get to catch Broadway shows. So you can see here that as you're looking at the order book, one good rule of thumb for me is when you're thinking about price movement, you need to understand that market makers are motivated by transactions, right? Market makers are like ATMs. They really don't inherently care about the value of their inventory, just like an ATM doesn't care about the value of its dollar, right? What they care about is doing the transactions and getting the fees. So these large areas of liquidity, like or supply that we see through Bookmap, these are the areas where market makers are going to be highly motivated to move because these are institutional levels where they plan on doing those high volume transactions, right? So being able to see which direction the orders are being distributed across the book is very, very helpful, right? In being able to understand where the market makers are incentivized to go, right? So now the good rule of thumb that I like to use is over time with volume, price will move to size, right? So if your order book has lots of orders stacked to the top side, right, and you're seeing relevant distribution of orders institutionally to the top side, that's a bullish ticker. It wants to go up, no doubt about it. Now, it doesn't mean it is going up. That's a little different. It just means it wants to go up. The institutions and the market makers are trying to move the price higher because that's where they're putting their orders out. That doesn't mean we go up. We have to have volume, right? Over time with volume, right? So if we don't have the volume, if we don't have the buy orders, then we'll retreat and move either to a lower bid or a lower or to a higher seller if we're trying to sell, right? So if you notice here on Bookmap, you can see here, I want to kind of show you the reason I went short on Microsoft. As you can see here, we bought and we absorbed off of this large order right here to the top side. And you can kind of see that, and then we fell off of it very aggressively. And as we came back up, notice all of my Bookmap people. What do you call this guy right here? For those of you who don't play this game very much yet, this is called an iceberg. There you go, JP. Bear in mind, bringing in the knowledge, right? We call this an iceberg, right? So what's an iceberg? An iceberg, like if you look at my thing, is like this, right? It's an order that they're only showing you a certain number of orders on the book, but there's more orders there. So when the market maker negotiates that price, they get overwhelmed by the amount of sellers that are there. They pull away, and as they pull away, you can see that there's more sellers there. That's why they're an iceberg, because the depth is beneath the water, right? So as we started to pull away and we came back up, I noticed that this was an iceberg. There were more shares here than were available, which is what got me interested in attempting to short it, because it didn't feel like we had enough buying to go through that order. I knew there were more orders there, and the volume on the buy really wasn't lifting the price very well. Rather, anytime any big sells come in, right, we start to drop away. So that's why when we pulled back up, and I'll just show you where I'm at on it right now. When we pulled back up, I got short on Microsoft here, throwing a stop here, going for a target down here. The thought being is we won't buy through that seller and come stop me out. Right? So now, will this work 100% of the time? Obviously not. That's why we need risk management. But this is one way you can use the book. Now, we do know that there's larger orders to the top side, and there's also large orders to the downside, but the top side institutionally does look bullish. Right? So the bet or the play that I'm making right now is that we're going to fade that order because we're not going to have enough volume. Right? So this is one of the ways we can use this. So when I started going through and I started learning kind of about how these different things work and how we go around, I started to realize like that it's since the market makers are motivated by these movements. And any questions you guys have on market making, I can I've been told the great stories of the history all the way up through. But the market makers, when they're listing their orders out on the book, these are market makers moving the price. It is, in fact, their job and what their goal is and what they're trying to do. So by looking at Bookmap, you're literally getting to see right into the heart of the mind of the market maker, where they want to go, what they're thinking. You can see when news events are starting to impact things, right? You can see all kinds of different things. You can see when news events are coming because the order book starts to clear. Right? All of these different things can happen on that and makes it cool. So anyway, So hopefully, so far, everyone's kind of seeing a little bit of a gist of what we're looking into. So we were going to talk a little bit about how Bookmap really changed. One of the things I want to talk about is how Bookmap really changed my trading and really helped me. So I actually was using level 2 before I found Bookmap. And it was really interesting. If you use certain programs like DOS Trader, for instance, you could use like an order highlight feature so that you can kind of see where larger orders are. You really only see a couple, a couple little tiers away from the price. And funny enough, I know you guys would probably laugh at this. Imagine like how far it's come with Bookmap and everything. I would actually use my Epic pen here, which is this guy here that I'm using to draw on the charts. And I'd actually go over to my level 2 and I would actually write orders on my level 2, which for those of you, level 2 is the same thing as a DOM, right? Or a depth of market, right? So I'd actually write on my level 2 where I was seeing large orders. So if they dropped off, I would know that they were there. And then I could see if they got smaller or bigger. I used to always think, man, I just wish there was like a program that just like kept all of that. You know what I mean? And then I had so I got really good at reading the order book by reading a DOM and reading an L2. Then all of a sudden, I see this program Bookmap. It's introduced to me, and I just crack it open and look at it, and then we're just like, we're just like so excited, like because all of a sudden you just see all of this information. Not only can you see where those orders at, you can see it on an incredibly large price spread, and you can see the historical data. And believe it or not, I actually think that is probably the most valuable data out of all the data, is actually being able to see what happened last time, right? I believe I started using it about 2 years ago. It was actually I had the original version of Bookmap that I subscribed to, and then I ended up signing up for a TD Ameritrade account because you could get Bookmap on discount. And I've been with that ever since. So right now you can see I have Bookmap through Thinkorswim is how you're seeing my Bookmap, and that's being pulled through through what's now Charles Schwab because TD got bought out. I really like the full version of Bookmap, and the some of the indicators they have in there, and some of the overlay stuff they do, and all of that is so cool. And I'm jelly. I really want to pick it up and use it. My buddy Nathan, who a lot of you know, I'm Vale fan. I actually may or may not be responsible for teaching him how to trade, which is why he uses a cam system in Bookmap. But anyway, proud papa. Nathan is just an awesome trader. I know he's been in here helping you guys, and he's been doing a lot of material, and he's done one of these sessions, and just a super talented guy and very genuine. When we found Bookmap, it was just like, wow, like here's all of this information, all of this historical stuff here that we can utilize, and it was a game changer. One of our of the BBT staff, which is our Bear Bull traders, who when we're trading live in the pre-market right now, and we're trading live, Brian Pesum, who is my cohort. That we call him the Prophet of Profit, one of the best price action readers I've ever met. He uses Bookmap now as well because I talked him into it, and it's like not fair, right? A guy that talented at trading, and then giving him Bookmap. I just feel like I should have written somebody like an apology letter. Like it wasn't, it's like giving him a best thing. So last Friday was when I started missing Bookmap, realizing it could have helped me spot an entry outside my point of interest. Monday I found my entry and never have felt so. No luck. That's so the thing is once you start to know that we're moving from these big orders, right? Now that we've already talked about what really motivates, market makers to move and go where they're going to go, right? So now that we know that, right? If you know there's a big order to the downside and it's bouncing between that and the big order to the upside, if you catch that bounce, it's so easy to, for stops. I love using Bookmap for stops. Right, so if I'm going to go short, for instance, I'll wait for it to come up to one of those large orders and watch it negotiate the order. If it goes through the order with a buy and then comes and sets on top of the order, I won't short. If it buys into the order and then gets kicked out of it, pulls back up, right? Then I'll short, right, on that retest, and then I can play the failure of that because, and you can almost tell that just by the way, like notice here, when you had this big order, see how we had a big buy event, but the price didn't go through, it just absorbed and stayed under, right? So it's not that this is necessarily a short, but certainly not a long right there, because anytime you try and buy, you're absorbing, right? Anytime these other buys come through, you're not moving up in price, you're stagnating or moving down, right? Then when you see the red dots come in, you start to sell, right? The only reason we haven't dropped more is because there's obviously a buyer saying, oh yeah, and there they are. I was just about to say there's a high value buyer must be here in the mix somewhere because they keep holding, and here they are. Look, came in right underneath the price. So now we have this limit sitting right under the price. I still think we're going to pop down to 430. At least that's what my trade's based on is, is short of this level for a run to 430. But okay, there's a couple of tools that Doji that will really, really help you when it comes to trading Bookmap, using Bookmap. Okay, and anything else really. It's the methodology that's been here since the beginning, the inception of the market, and that is VPA, volume and price analysis. Some resources, I do a chapter of it in my book naturally. The best book that I've got on it that I'm aware of is Miss Anna Cooling. Does an absolutely amazing book. That's called A Complete Guide to Volume and Price Analysis. I may have partially yoinked part of her title because I like her book so much. Just kidding. So volume and price analysis is the comparison of volume versus movement, right? So basically the concept being is if we see buys come in and we see buys come in with a lot of volume, the price should go up, right? If you see buys come in and there's a lot of volume, but the price doesn't go anywhere, that's what we would call a VPA anomaly. And that's absorption, right? What that means is although all of those buys came through, where did they go? That means the market maker had to have taken those shares, right? There was someone immediately available at that price and they absorbed them and then took them. So if you're buying, you expect the buying to lift the price. Anytime you see the price going up and all of a sudden you start seeing big green bubbles and then the price is just moving sideways, you're at a seller. You just can't see the seller. They're not on the book, but you're at a seller. They've got to be there. And then as soon as the price pulls away, normally about like maybe after it pulls like maybe like 5 or 10 cents away, you'll all of a sudden you'll see a big limit order come out on the sell, right? And that iceberg will appear and say, oh, here, no, we're here, come back. We've got more shares we want to give you, right? And then the market maker, if they're sufficiently warehoused, will then go back up and start hammering into that order again. But the market maker won't commit if they don't know how much is on the iceberg, or they'll try and hit it with so much volume they just blast through it and basically leave it, right? So how did you select what ticker to trade when you trade futures? Do you have a pre-market routine? So for futures, I really just kind of play the same like basic concepts. I only trade micros. One of the advantages to only trading micros is all micros are cash settled, right? So you don't ever have to worry about having 1,000 barrels of oil showing up on your front door. I generically play micros that are related to the ES, to the SPY, the Qs, or I'll play crude, right? Gold, silver, right? Basically just the major ones. Also, depending on the European market, you can play FTSE, via futures, and some other things like that. Hey, it's very true, Rob. Nice jacket. It's very, very true though, that you could be a fun thing. Actually, our fearless leader over at BBT recently bought like a Lambo SUV, but he can't get insurance for it because he lives in Canada. It's hilarious. But I was thinking, how fun would it be if we got 1,000 barrels of oil dropped off around the car he can't use? Epic. I know I'm a mean employee. Why the micros? I love the micro futures. One, again, because they're cash settled, right? So one thing you have to worry about with futures, right, is you have to understand how things are settled, right? So there are futures out there that are asset set or that are settled by taking possession of the asset, right? So if you're trading gold, full size gold, you could be getting yourself a pallet of gold. You know what I mean? So so I like using micros because micros are cash settled. So which basically means if you allow them to expire, all that happens is they either take money out or they put money in. But if you're like short oil, you're not responsible for like giving anybody 1,000 barrels of oil. Can you go over the settings when using for first time things you highly recommend adjusting? Settings in Bookmap. There's a couple that are really handy that I really like. The number one, all right. I really like cumulative volume delta. Um, when I do my cumulative volume delta, I actually like using this one for some reason on Microsoft because I haven't adjusted it for a while. Is not how I normally do it. I actually normally do this as a 15-minute. So let me fix that. I obviously haven't traded Microsoft for a little while. Okay, let's do that. We'll just ignore the name for now. So the first thing I really like is CVD. Cumulative volume delta is kind of the great answer to that mythical question. Is it? Right? Is it buying or is it selling? You know what I mean? If the CVD is red, it's selling. If the CVD is green, it's buying. It doesn't mean it's necessarily going up or down, by the way. Buying or selling has nothing to do with direction. There are stocks that can sell up all day. There's stocks that can buy down all day. Right? It just depends on if the market makers are accumulating or distributing a large position. Right? If a market maker's high enough in the range, they can or low enough in the range, they can literally just move down all day on green dots, right? So just because something's green doesn't mean it's going up. That's just the preference, right? We want to see green dots. It can go down on green dots. That's not what you want ideally. So I use the CVD so I can kind of tell, are we accumulating or distributing? Are we buying? Are we selling? And then I use a 15-minute CVD so I can see what that looks like on the smaller time frame, right? So are we accumulating? Maybe we've been buying all day, but for the past 15 minutes we've been selling. So maybe at this point I'll look for some kind of a reversal, right? In the heat map itself, one thing that I like to use, I'm not entirely sure if this is the same on the full version, but on the TOS version, the auto smoothing is very smooth. So it really kind of clouds up a lot of the orders, and I like it just a little bit fine tuned. I like a little more 20/20 on my vision. This is a little bit more, not quite there. So in order to do that, what I like to do is come down here to this to the Gaussian filter, and you're gonna hit that bad boy and then drag it down. Take your sigma down, and I like to do that somewhere, maybe pretty close to 0, maybe about, let's see, if this is 10, it'd probably be around like the 2 or the 3 mark, right? So, and then what that does is that takes it from being like this, right, down to this nice, like, crisp, you can really kind of see where these orders are coming in really nicely that way, right? So that's a really big one for seeing how things are going. I really like that one. I don't use the large lot tracker, although I should. I just haven't had time to get through everything. Volume bars. This one is wrong. I'm changing it. I like to do volume delta for my volume bars. So I can just see it. I don't really care if there was, I just want to was there more selling or was there more buying on that bar? So my regular chart has the full size bar. So on Bookmap, I like using the volume delta. Let's see, volume dots, 3D bubbles, volume delta as well. And that's it. That should be my settings for you there, JP. Good. Thank you, everybody, by the way, who came in to hang out with us today and go through some things. I'm kind of here for y'all and just to talk and chat about trading. So if y'all have any questions or anything you're thinking about, feel free to ask away. I intentionally didn't like verbosely like prepare. I'll get a little bit into, since we've got like an hour and change, I'll get a little bit into my trading system a little bit. I'll talk to you guys a little bit about the where, when, and the how concept for trading, which I think is really valuable for new traders to pay attention to. Can you go? Oh, get a swig real quick. Okay, Javi Bob, that's a great question. So the difference between an iceberg and just a lot of orders, whether you can see them or not, right? A lot of orders is what we call a wall. The difference between a wall and an iceberg is you can see a wall, you can't see an iceberg. And that's the major difference, right? When you see a large giant order and you're going in and hitting it, right, you can see that negotiation of the wall and you can see if they break the wall or not, right? But in an iceberg, you'll be moving up and out of nowhere, you'll just see a large sell occur. And then we pull back, we go back up, and there's more selling there. We come back, we go back up, there's more selling there. Like you don't see an order on the order book, right? But you can, and this is why Bookmap's historical level 2 is so valuable, right? The historical DOM is so valuable because you can look at a level and you can see every time we went to this level, we had a large buy there and we didn't move anywhere, right? Every time we went to this level, we had a large buy, right? Or every time we went to that level, we had a large sell. Every time we had a large order, we had a large sell. You know what I mean? You can go up and you can kind of look and see how well the process is going on what they're trying to do. Big order there. They obviously want to go up. So the question is, can they? Right? If they can, they will. Right? So if we don't think they can, then we'll do the other. On Bookmap, how do you differentiate the order for buy or sell? Sorry, I'm totally new to this. Raja, first off, me too. This is my first time presenting in here. So I appreciate you coming by and hanging out with me. We're both new. Let's be new together. And understand that the question you're asking is probably a question like 4 other people are asking because they're new too. And even the best of us could always use a little refresher on the rudimentary stuff, right? So when we're talking about buy versus sell, now keep in mind, right? We're when we're talking about buys versus sells, right? We're talking about our green bubbles versus our red bubbles, right? So when we're looking at bubbles, we're looking at market activity, right? And how our market activity is responding to our limit orders, right? So if we and these bubbles are using what's called volume CVD, cumulative volume delta, right? Or volume delta. So this bubble is green, so that shows there was more buying that occurred at that level, right? As we were filled, we had more market buys at that level, right? And then we fell away. Where can I find 2 bars on the top right side in Bookmap? These 2 right up here? I think those are just on here for me. Hold on, let me see.
Or those are
This
the book and volume imbalance add-on indicators.
okay.
So it can show you for the viewable chart range if the book has been skewed a certain amount or the skewed a certain amount. And
Beautiful.
yeah, and it's on got a percentage there and a number, but you've got the infographic, which very middle is the zero, so it might be a little. That means like you can see it's if zero line is in the middle, you can see the book is negatively skewed by that 72% or
Hmm.
so. So
That's really interesting.
some orders just came in and skewed the.
Yeah, so that's really handy, especially so we're talking about that absorption thing from earlier here. You can see we're trying to push up, but we're getting Right now, we're getting more sell orders than buy orders in this time frame because now that's kind of balanced. Then we're getting a little bit more selling than buying. So that's really interesting. I don't pay attention to that indicator enough, Bruce. Thanks
Oh,
for explaining that.
I'm already scheduling a time to go through some of these things with you.
Yeah, these are great. This one's a really nice one. I like it.
Excellent.
So, can you please talk more about how to interpret them? Of course. I can talk about anything. Hey, Zed. I like the avatar icon.
I think
AC.
we can go over the volume and book and balance another time. I think the thrust of things though, like how you, etc. And don't worry about going technical stuff. We can do that Friday's webinar.
Cool. Great. That's such a great thing about how much info that you guys are getting through this community. You really start diving into the all of the stuff you guys got for Bookmap. It's very verbose. There's a lot going on in here. It's quite impressive. So I mean, imagine I just can only when I started trading. I feel like trading in 2017 was like trading like 20 years ago, not like 6 years ago, because there's so much more now, which is pretty awesome. So I really would have liked having Bookmap when I first started. Oh man. So anyway, cool. So let's talk. We'll ACO. We'll make sure. I'm sure they'll reach out or we'll talk a little bit about making sure. I'm sure it's there. To getting those added into your system because it is an add-on, as I believe for that version. So I'm sure you can talk and they'll get you squared away on that one. Unfortunately, I'm from outside. So I don't know all the subscription stuff and the add-on stuff and all that. Not yet. After I do a couple of these, I'll probably figure some of it out. But for now, pardon my ignorance. Let's see. What's up, Vincent? Yeah, exactly. You can see it comes down on there. There's not a lot of orders. You sell into it, all of a sudden it bounces, and as it runs away, it leaves a whole bunch of orders down there, right? What are the best or top 5 indicators for Bookmap? I want to know so I can review and learn more about them. I really like the CVD indicator. I think that one's a really important one. Being aware of whether the ticker is buying or selling primarily helps quite a bit. Other than that, Bookmap's like major value for me is in fact just the book itself and being able to observe the movement of the market. So let me I'll kind of use that to segue into kind of my trading style a little bit. So when you're obviously I'm a professional day trader. I've been profitable for well over for over 5 years now. Paying my bills, doing my thing. So figured a couple things out, thank goodness. Right. So, and I want to kind of talk to you a little bit about that from a day trader's perspective. Right. So the first thing we got to understand, right, is when you learn how to day trade, the principal methodology that everyone kind of comes in with is what is called the where, the when, and the how. Right. You want to learn where to take a trade, when to take it, and then how to manage it. And that we call that kind of like the order of operations for trading, right? If you're going to put together your trading, you know, equation, right? That's gonna hey Thor, do you ever zoom into the fractal microstructure more zoomed out? I stay more zoomed out, Steven, actually. I really am because I'm a range trader and I'm really kind of concerned with the higher value points. I tend to just kind of watch as we interact with the bigger orders and stuff like that. I haven't gotten too much in on the littler time frame in that, but it certainly is very valuable, especially if I'm looking to see if it's going to break. I'll get in there and kind of look how it's bumping. But for the most part, I tend to stay zoomed out almost all the time. It's seeing how these larger orders play. This is recorded, Hikon. I believe after this is done and after, for a short bit of time, I think they might even release this on their YouTube. So make sure you're subscribed to their YouTube. And then make sure you ring the notification thing. So when it becomes available, you'll be the first to know. YouTube plug. Score. Just kidding. So so it's kind of the order of operation. For the record, for anyone who doesn't know, I'm on the spectrum and I have ADHD like no one's problem. So if I whip back and forth on you a little bit, so sorry. So when we're talking about this order of operations, right, our where, our when, and our how, it's just an order of operations. Order of importance is exactly backwards. It's much more important how you manage your trades than when you take them or where you take them from. It's more important when you take your trades than where you take them from. But it's very important where you take them from because you need to know where to take them from so that you can make sure you get good RVR and good profit targets and all of these things. Where the two easiest things to develop are the where and the how. The how is actually what kills the majority of most traders. It's just management, right? You're supposed to hold the trade, but you didn't. You're supposed to stop out, but you didn't, right? It's all of the things you should have done, behavioral slippage stuff. That's pretty much what obliterates most traders, right? And the reason why they become so frustrated is because they don't know when to get in and out of trades. So what's really, really important is you know where to look for trades. You know how you're going to manage it because confidence in trading actually doesn't come from picking the right direction. It comes from knowing how you'll respond to being wrong, right? And then using tools like Bookmap and volume and price analysis to actually pick the right direction. And that's where Bookmap really comes in that trifecta, right? Bookmap is a major part of my win to take a trade, right? When we're looking at our order book, we can see where they want to go, where those areas are. We can see what key levels, right? When you see high of day, you see low of day, you can still see there's big orders there. You can still see there's big orders there. So you know we're going to go up to one, likely cave off the other one and run to the other. So now you can use Bookmap to watch the approach, you can watch the rejection, and you can watch the movement away. And it just completely changes the realm of trading. Um, so Raja, it's the tough thing, man. It is a tough thing. As you start to trade, I have a buddy of mine that I worked with, a now buddy of mine that I worked with, and he took him 6 years to learn how to day trade effectively. Now, keep in mind he's a professional, other things, right? So he didn't get as much full time in. But when I asked him, like he's finally making money, he's doing really well. He's like, I remember when this was hard. And I went and I asked the guy, and I'm like, man, what's the big difference here? Like, what changed for you? And basically, the long story short was, it took me 2 years to learn how to trade, and then 4 years how to do what I already knew how to do, right? Like it's like he already knew what he should be doing, but it took him 4 years to basically work out actually just doing it, right? And getting through that process. So, again, tools like Bookmap help you so much because being able to get the win and to know that directional, if you can pair that with knowing a good how and knowing where you're looking for. So now I have a spot where I want to sell from. Now you can use Bookmap to see if you're selling there, right? And if you are selling there and you're in an area where you've sold from before, in an area where you could sell again, right? The stock market does the same thing over and over and over again until it doesn't, right? Always does the same thing over and over and over and over again until it doesn't, right? So if it's sold there before, more often than not, it's going to sell there again, right? And then you can do that over and over again until it doesn't, right? So if you keep hitting that seller, even if you end up being wrong eventually, you'll hit it a couple times and be right first or after. And it kind of works out that way. Being able to observe the order book and see how well the process is going as we're moving up and down through orders is just so does my book include any sections directly on Bookmap? I forget if I know I was starting to use it. I don't know if I actually put any screenshots of Bookmap into my book because I was probably worried about paying Bruce some kind of a royalty or something like that. If
No
there is
worries
one in
there.
here, I'll deny it. I'll deny it. No, I'm just kidding, Bruce. Thank you. Let's see. I'm looking in my. Oh, yep. Look at this. Sure did. Y'all heard Bruce say it doesn't matter. He doesn't mind, by the way. Before I showed you. So you can see here we actually have an example of a stock long, and I wanted to show an example of a bullish order book, right? So yeah, there actually is some. I do an entire section on order book or reading the DOM, and it closes out with a Bookmap section. Old school Bookmap though, from like a while ago. Couple screenshots. Thanks, Nikki. So I mean, not a huge. I didn't spend a lot of time. You know what I mean? In that, but it's created some great examples when I was talking about bullish versus bearish books. I also have some screenshots of DOS's level 2 using the order highlight. Nick, I already said it once. I'll say it again. Anna Cooling, she's the GOAT for VPA. A really great read for volume and price analysis, Anna Cooling. Her new book's got color pictures too. So you gotta love color pictures. So basically, this is how I approach trading in general, right? So now I talk about pivot structure that I use for my where, right? So for my when, I use VPA and Bookmap. And then for how, I've really simplified my how. I'm a very basic person when it comes to my how. I do 4-to-1 risk versus reward. I use range orders. I don't use break even. I don't take partials. It's just very, just very, very kind of a simple set. So analyzing Microsoft with the bubbles, sure. So right now, as you're looking at Microsoft, if you zoom out, even why is my data lacking? Hold on, let me load in a little bit more. I'm loading in data. I'm downloading this via Starlink satellite. Why does it's like 202K, but I'm on a 56K modem. So this 202K is going to take, no, I'm just kidding. I'm on fiber. So notice right out of the gate, this is what got me interested in shorting. I noticed right at the beginning in the pre-market, we had a really large order sitting in the pre-market to the downside. Just kind of seemed like a natural spot that we were really looking for the price to go lower, and I already knew we've got really big orders down at 420. So so I started watching it, and even as the price went up, this order actually dropped. So I was like into like a more solid position. It went from the spot 50 to spot 0, and I was just like, all right, so right, Rob. So I still, although we were pushing, and look at the big sell that was absorbed here, and then we started buying, the volume just seemed really, really weak. And then when we bought up into this order, right, we got this really big green dot, and we didn't go through the price. Right now, when we're talking about VPA on top of what we're looking at with Bookmap, right, if I see big green dots, I expect the price to go up. You know what I mean? Like, we've got volume, we've got buyers, and they are market orders, and we are doing this. You know what I mean? So if we're popping orders and we've got good volume, but the price isn't going up, we've got a major problem, right? We've got absorption here, which means we either have a large off the book seller or the market maker is doing something interesting, right? Either way, that's going to be a big red flag for us to start thinking about something different. So as I was coming up here right before I shorted, another bid came out to the downside at 430, and that's the bid I'm targeting. So I'm short now from up here, right? Utilizing what I think is an iceberg seller, and I'm trying to hold for a sell back to 430, and my profit target is sitting right in front of 430. So I'm at like what's my profit target? It's like 430.04. So I'm sitting 4 cents in front of 430. Right? So the reason why I'm feeling short on this, right, is because we have a large bid to the downside. We've brought in more bids to the downside. As we've pushed, we have not brought in strong sellers. Rather, they're kind of iceberging and being all weird and mischievous. Anytime we get large green bubbles, our price moves sideways, right? And anytime we get red bubbles, right, our price drops with the red bubbles. Right. So for me, I feel like this is a distributionary activity, right? Stair step up, waterfall down. So I'm going to play the short since I feel like the market makers are distributing here under this large order. And I think after they distribute to reaccumulate, they'll probably go to 430 and then maybe even lower. So we'll have to see how that goes. If they ever do it. Would you mind taking a look at ES? Yeah, I'd love to look at ES. So futures are the reason Bookmap became an everyday part of my life. I started my system, my Camarilla pivot system is actually based on an S&P futures system. So it works really, really good on futures. And I was trading using DOS Trader Pro, and DOS Trader Pro unfortunately does not have a DOM for futures. So when I started learning how to trade futures, that's when I took the cold plunge into Bookmap, because I needed a DOM, and I needed a DOM that worked on futures. And they had this, and then again, this beautiful order book, right? That I could was so easy to read. So I ended up kind of jumping into that. So the thing that we've been noticing for a couple of days now, and this is on the futures and the NQ and ES, we are carrying really large orders to the downside. There are some sellers sitting close to the price up here, like 5,800 and just below. I know they're hard to see now. I wonder if you can see it better on NQ. Hold on. Hold on. 56K modem. Had to dial it in. Down here, 20,000 and 20,050. These orders have been here for days. Yesterday, when we bounced the Qs, this is where we bounced the Qs from. Right? This order set here. We went down into 2050 or 20,050 and then 20,000 zero, or just 20,000 spot. So now we do have a seller to the top side, but we have a lot of really nice solid buyers to the downside. And notice again, our green dots are coming in, and as our green dots are coming in, the price is moving laterally, right? Our red dots kind of drop the price pretty well, but anytime our green dots are coming in, we're really just kind of stagnating. So it feels to me, at least just by looking at it, that this feels like we're kind of attempting to distribute the ES right now. I mean, we are like at all-time highs, right? So it kind of makes sense that somebody's going to start selling up here, right? So if we capitulate, then it would be very easy for us to roll down and go hit those lows of the previous day, down near 20,000, which are where these big juicy orders have been sitting just for days, right? So now I have a feeling we end up there sooner than later. We may rally away and hit 20,250 first, then roll over and move down. It's certainly possible. But right now, we don't seem to have a lot of volume on the bid or when we start buying at the price. So it's hard to imagine the market's got the gas to do that, but they do what they want, ES is looking to break premium, and from there I can see a clear path down to discount. Mr. No Luck, I like the way you talk. That's I agree. Since futures trades 23 hours a day, may I ask the time you have VWAP reset set on your Bookmap? I reset my VWAP at 6 p.m. for futures. But you could do midnight if you wanted. I doubt it would change much, but I do mine at 6 p.m. because futures they open at 6 p.m. Eastern and they go till 5. 24/7, or not really 24, like 6. My pleasure, Fun Trader. So unfortunately, Microsoft, right after I got into it, like had this beautiful drop right after I got into it. So I was really, look at that I mean, the call was good on the entry. I just didn't quite get to my target before it came back up. But man, that was a really nice spot. But didn't get the follow through. At least not yet. Still got time. We still got 30 minutes left in this day. Oh, thanks, Fun Trader. It's good to see you. Again, appreciate everyone that ended up coming by and hanging out. Opinion on trading NQ futures? I love trading NQ. Not the full size. Trade the micros. No point to trade the future. I mean, if you can afford to trade the full size, have at it. But I prefer trading the micros. Um, which are just, I mean, they're a lot of fun. What's interesting is NQ micros are actually cheaper than ES micros. A lot of people kind of don't realize that because when you trade them, ES trades so much slower than NQ but it kind of gives you this feeling that NQ is way more expensive, but NQ is actually cheaper. It actually costs less per contract per tick to carry NQ. But ES moves faster, right? Fun Trader asks, what's the best promotion on Bookmap? What do you got for Thor? What's the best Bookmap promo? No one could ever resist signing up with this promo. No, I'm kidding. So I like MNQ. For those of you who are looking at trading futures, my buddy, he's actually in here right now. G-Prof, are you still in here? Yeah, he is. My buddy G-Prof, if you beg him, maybe he'll share it with you. Where's that at? Oh, I almost shared one of your really good trades you had the other day. Hold on, downloads. Right here. This is so you can kind of see an NQ and an ES breakdown here. So you can see here, like for ES, notice that ES is actually $5 per contract when it moves, right? So if you take one contract for each point, you're risking $5, right? So NQ for each point, you're actually only risking $2. So NQ is actually cheaper, or MNQ. But MNQ, and this is where people kind of get it backwards, right? MNQ, right? Look, the ATR on NQ is 354. The ATR on ES is 69, right? So the ATRs are like this. So this is why a lot of us really like MNQ, because if you run a relatively reasonable stop, you can risk. I mean, we had some really we bought the bottom yesterday. I think it was S6 yesterday, and we got full range runs on NQ yesterday. I only took like 3 contracts, I think. I only had to get a fraction of that move and I hit my $800 target. You know what I mean? It was just just piece of cake. You know what I mean? So, it really doesn't. But ES is great, but ES moves slower. So if you don't like if you want to run a wider stop and you don't want to have to be quite so aggressive with the entry and the exit, then ES is a little bit funner. CL trades really good on certain days. We also trade the Dow, which is for the micro MYM. Or you could trade the Russell 2000. If when the low floats get popping, we'll fly in and start playing M2K, and start playing the Russell 2000 futures, and on the response of that market, have a good time with that. You know what I mean? All right. We're starting to get a little bit of selling coming into the queues right now. So, just as an example of some futures, I was holding a position before, and I cut it on my trail because I made my profit, and I cut it on my trail when it started to came back, and then I re-entered when it looked like we were still going to be weak. So you can see I cut here and then re-entered because I could reassess my RVR. But you can even see here. So what I did now, because we're getting late in the day, is I just pulled my stop in, and my stop is trailing the 50 SMA. So no matter what happens on this position, I'll cover $17. If for some reason it decides to just go into some kind of crazy sell-off, my total target would be, if I could hit my maximum target, which is an 800 tick move, basically with these two contracts, would be, it would make me $800 if this is some kind of crazy sell-off right now. I have no anticipation of that happening at this point because we haven't really moved a lot. So I'll probably hang on to this for another, if this doesn't come up and stop me out, and come through the 50, which it likely will. Then yeah, just 2 micros of NQ, MNQ. So if this happens to come back up and stop me, I'll just get out because the day is almost over, and I'll just call it a wrap. Otherwise, I'll just hold this and just see how much I can get out of it, and I'll just let it trail the 50. So if it comes through the 50 SMA, I'll be out. If it hits a target, I'll be out. Or if my position auto exits everything at 5:30, or sorry, at 4:30 p.m. I've got my rhythmic set up to automatically exit all of my positions 10 minutes, or sorry, 30 minutes after, 30 minutes prior to the futures close. My data will go in there and automatically cut it. So you can see here, I'm in M&Q December contracts, and I'm short 2. Love shorting me some contracts. It's a good time. Love me some futures.
Hey, Thor, how do you manage some of the pivots? Like in your Microsoft, I think you down. I was wondering, or maybe didn't. I can't recall. But since that's kind of the guiding line, kind of bigger picture structure, how is it that you manage your positions around some of the pivots?
Sure, absolutely. Let me pull that up. So basically, so what I do, so my general rule of thumb when I'm trading, more or less, is is long above the force, short below the force. So as long as I'm under the fours, anything in here is what I would consider to be a selling range. So and then if I go through the fours and out the top, then I start buying again because I'm in a breakout range. So as long as I'm under the fours, it's a short. And in this instance, because it's a lower range today than it was yesterday, I'm actually looking for a pullback right into kind of where we sold from before to see if we sell again. So we pulled right back up into that area. You can kind of see like pre-market from that day was here. And then so we pulled right back into that area and started to sell, which is why I really liked it. But pretty much I'm probably going to go ahead and move this position to break even at this point too, just because we're at the end of the day. Um, so there's not really much of a point for me to hold it beyond that, but we'll see what happens. So, but yeah, so in this, I have a whole strategy set that I utilize, and it's based upon opening position. So, let me show you if I can find it real quick. So you can kind of see here, if the stock price opens and it's a higher range, right? And we were in a lower range on Microsoft, or a trend short. So if it's in a lower range, if it opens up in the center of the cams, then I look for it to squeeze back to R3, and then it can go over it or under it a little bit. It doesn't have to be perfect, but ideally it stays under it. And then we go up here and I'll short there. Ideally, my stop will be right up here, and then I target the move back to S3 across. If we start off selling first because it's a lower range, I'll let it come all the way to S4, and then I'll buy it off of S4 if it looks like we're going to bottom. If it looks like we're going to do a continuation and trend breakdown, then I might even get short from there. If we open outside the range, then I generically will play out of the range at all times.
So it sounds like you're really looking forward to extend and then trade back. Well, hit the level or the pivot and then trade back through it. Uh,
Yeah, it's some days for sure. So basically, what I'll look at is like if the cams are narrow compared. So I use like the 2-day pivot relationship. So if I look at yesterday, and yesterday the cams are really really wide, and today they're really narrow, then I'm gonna play it. The ATR stays the same, so I'm gonna play outside on those days. So I'm gonna look at trades that more likely go away from the range on the days that we kind of have that going on. So, but on the days where the cams are really really wide, for instance, on these days, or I'll call them an inside day, we I end up playing more of those failures that come in and across the ranges because of the width. And the ATR is pretty much the same, but the difference being is on there's going to be a middle value area, which will be a big old order, right? And then there's going to be a value area here and a value area here. So on the narrow range, I'm going to play from the inside out to those larger value areas. And on the wide day, I'm going to play the ping pong between the larger value areas.
I got
So
you.
it just kind of depends on where we open versus how wide the range is. So like today, if the range is relatively wide and we open in the center, then R3 for my short's going to be where I want to be because it comes from like right there.
Interesting. Yeah, I was just going to ask about like so how do you integrate like ATR with that, and then the ATR doesn't necessarily matter. What matters is the price action of previous days. So narrow ranges and then a breakout extending off of inside out on your,
Yeah,
or if it,
exactly.
or if it's like big ranges and volatility from the previous days, you're looking outside in type of plays.
Yeah, so for instance here you can see on Microsoft yesterday. So if we're looking at like our central pivot area, right? It's only about that big from 434 down to maybe 432, pretty narrow. And then today though our CPR is much wider, maybe $1 to two, $1.50 wider. So and this broke outside of range and went to S6. So this one, because this range is wider than this range, I'm going to be more inclined to look at it to stay inside. But either way, we're still going to sell from the same spot.
Right.
I mean, it's still that same spot where we sold from in pre-market and then lost at the open. I'm just basically watching it retest that order, right? And that's what I was showing everybody. They had this big order at 433. You know what I mean? That we sold through, and then we've come back up to it. And anytime we go through and try and buy through it, you see this big engulfing candle here. But look at the deviation. In order to move up, we should have had a lot of volume on this big engulfing candle. Yet we just ran up and tagged an order there, and then immediately rejected away from it. So
Right.
you can really this. So this is why I love taking my cams and lining them up with your large orders in Bookmap. Like if I see a big order already parked right there, you know what I mean? It's almost a no-brainer. I'm just going to sit back and wait for a little bit, see it go up and tag that big order. If I'm far enough away, I could buy and play the movement to that big order, right? Which is kind of what the S3 is. If it opens and goes to S3 first, I'll buy S3 and then play that movement up to the order. If it makes the movement up first, I'll let it hit the order and then play the rejection back down. Since it's a wide range, I don't expect to break out. So I'm just going to play the ebb and flow back and forth.
And that's when you jump into like, so you got your kind of a structure for the day, and then you're looking at the order.
Exactly. So and the book map reinforces it, gives me the order flow and helps me reinforce the structure. So because the pivots are created using previous day's high, previous day's low, and the previous day's close is how we calculate the skew of the range, right? So, but previous day's high is created by large orders, right? We stopped going up because we didn't have enough buyers to go through the orders that were there. Same thing with the low, right? So if you can use Bookmap and you can see large orders near previous day's high and previous day's low, you could technically trade right off of that, right? I just, for me, I like to, the cams give me that ATR concept as well of being the buying range and the selling range. So I have a selling range. I see sellers in Bookmap, right? So I'm going to watch us go into those sellers. If we start to sell, I'm going to sell, and then I'll cover when we get into the back into the buying range.
Yeah, yeah, beautiful. I love it. Strong.
So it's a really nice for me. So what I found, Bruce, was like I I don't think it's a lot. There are a lot of traders out there that are significantly more talented as far as a trader goes, like in read price action and quick movement and all of those things. I wasn't so good at that. I'm not a very good momentum trader. I actually I don't partial and I don't add into trades because I actually kind of stink at that part. What I am good at is recognizing areas of high transactional potential and then playing the acceptance or the rejection of those. And Bookmap is an ideal tool for observing that interaction because I can see where the big orders are. I can watch us go into the big orders, and then the assumption being if we don't have those big orders, we're going to go back to the other big orders the other way, and it's pretty sweet. What defines the opening range? The technical definition of the opening range is the first 30 minutes of the day. Although that gets redefined depending on who you're talking to. But like if you were going to run an ORB report or something like that, in most instances, it would be a 30-minute report. The initial balance range is created in the first hour. And 15 minutes is normally just price discovery stuff, but it's not really an opening range. But anything other than that, it's not really a range. It's just a candle, like a 1-minute opening candle break, for instance. Uh, yeah.
Sorry about that, guys. I had a little issue here.
No worries. Do you pay attention? Oh, hold on. It is why shorting is faster than buying. Shorting isn't necessarily faster than buying. It just depends on what range you're in, right? If you're in a selling range, shorting is going to be faster than buying. If you're in a buying range, buying is going to be faster than shorting. It just depends on if you're accumulating or distributing. If you're accumulating, the concept is stair step down, elevator up, right? And if you're distributing, it's stairs up, elevator down, right? So, and you'll notice in the price action, you'll see it takes a really, really long time to move up in the price, but then 5 or 10 seconds for it to waterfall away, or 5 or 10 minutes for it to waterfall away, right? So, and then it struggles and takes a really long time to move up and then waterfalls away, right? This is how you know you're in a distribution because you're selling really easy. And anytime you try and move up, big green dots, but you're not really going anywhere, right? Someone's kind of going into that. But when you do start to sell, anyone who's been buying, if they start putting sell orders into it, don't be shocked if there's a big old waterfall, right? Thor, hey Steven, how are you doing, buddy? Do you use concepts of traders being trapped in particular levels? Curious your methodology with books, visual cues. So absolutely, Steven, but more than traders, market makers. A lot of people underestimate the pressure that various market making entities are put on by other market makers, right? Most market maker, the great consolidation, that happened, when groups like Citadel started coming in and eating up all the mom and pops, right, created a major imbalance. You're talking about massive market makers that are backed with billions of dollars worth of, capital. I mean, it's absolutely incredible. But all of the market makers that have resolved have all done so at the hands of other market makers. So there are times when market makers have negotiated certain deals, and you've got a client, and that client says, I'm only willing to buy if the price is at 180 and no higher, right? And then the price gets really close to 180, that market maker might have to make a decision, you know what I mean, on how they're going to handle that transaction, because if it goes too high, they're no longer they're going to have to fill that customer at their detriment, and it's going to really make them look bad too. You know, it's bad service, because they're not able to fulfill the requests that were put upon them. So a lot of these times, you know, if you think about market makers at any given time are putting out 75 to 80% of the traffic institutional anyway, right? I think as of this year, retailers were responsible for anywhere between like 20%, maybe a little bit more of the traffic, which is a lot, but it's highly unorganized, and it's certainly not 75%. So most of that big volume hits and those big they are market makers coming out and hitting orders. Now, do we know that they can see the stops of all the retailers? Are they a big wheel that's willing to come down and scoop the liquidity from all of these traders who are hiding their stops behind institutional orders like I do? Of course they do. You know what I mean? If they didn't do that, we wouldn't need RVR. You know, so they're going to come down and get you. And sometime, for those of you looking to read Wyckoff methodology, for some information on this kind of a concept. Anna Cooling covers it in her book as well. The Wyckoff spring being the most notable instrument here, just talking about them coming down, hitting that hard liquidity, and then bouncing off of that liquidity and running the other direction. Certainly, if they're looking for just a little bit more gas, you know, they could do that. And sometimes the other thing is it's about filling, right? If you have an institutional short seller that is only willing to cover that order lower, right? They may need to pop low just to pull that seller lower so that when they come back up, that seller will get out of the rest of the position. And that short seller coming out, especially if they start coming out on market orders, is going to be massive fuel for the fire if they're trying to move up into a seller, because they probably already have a buyer for that seller pre-negotiated. Now they've got short sellers fueling the movement up. It's going to make it very easy for them to get up there and do that. But yeah, that I absolutely do for sure.
Hey,
Yeah, exactly. They just come up and grab you. They'll do it. So I'm still holding this stinking Microsoft position. I'm just seeing how close to the close we can get before I have to cut this thing.
hey, Thor, do you ever like look for since you're looking at the volume PA, like do you ever wait for a strong move and then the volume to support that, but then you low volume?
Oh, absolutely.
Okay.
Absolutely. So when we're talking about VPA, right, we have three principal signatures for VPA, and it comprises my favorite acronym, which is advancing volume, stopping volume, and struggling volume. So if you make an acronym out of that, it's a fun time. Advancing volume, and this is Wyckoff methodology, old school, right? Basically, as you move up, the volume should increase. As you move back, the volume should rest. As you start to advance again, the volume should increase. As it pulls back, the volume should rest. If you go up and hit a large order and then it comes off of that order, right? If the selling increases off of that order, that's the first signal. You know, you've had a large volume spike. Now you've had selling off of that order, right? That's your first real signal. That's your stopping volume. You know, that something is going on. You had advancing volume. Now you're struggling. You're trying to push and you're getting high volume. That's actually making you sell away. So that's your real big signal there that something's about to happen. The final nail in the coffin for that reversal is going to be struggling volume. And you can only see that when it tries to push up. Because remember what we said about advancing volume, right? Or what I said, it's a push up, pull back on low volume. Sorry about that. That is my alarm reminding me to exit my positions before the market closes. I recommend everybody put one of those on, because you know you have kids and stuff like that. You're out running around, and all of a sudden you start to realize, oh man, it's I left my position on, and it's 5 p.m. and there's nothing I can do about it. You're not gonna sleep that night. We remember as we were pushing up, advancing volume, big up, little down. Well, if you go big up and then big down, right? That's not advancing volume, that's stopping volume. Right now, if you try to go up, and when you go up, that volume struggles or it drops and then starts to increase as it comes back down, well, guess what, folks? We have advancing volume in the other direction, right? So a really great reversal signal is going to be a high volume hit off of a large seller, right? Ideally, we won't be able to buy through the seller, right? We will buy and absorb into the seller. We'll fall off of them with high volume selling. And as we pull back to that seller, likely an iceberg will be there. And as we pull back up to them, our buying volume will struggle as we push. If we find out there's more sells available, but we're showing a lack of buying interest, then we'll likely roll over if volume comes in. That's advancing in the other direction. It's time to get short. Or reverse that for longs. Anytime you're looking at an accumulation, you want to see big volume hit, right? Then when we come off of it, you actually want to see an increase in volume as you come away. And then as we come back down, that volume should rest. And if it does, that's your advancing signal for the reversal off of the bottom. So volume really, really key. If you take Bookmap and put good, clean VPA on top of it, it's secret sauce. It's good stuff. I went ahead and moved although I normally don't move to break even, just because we're at the close, I went ahead and moved to break even. So if this squeezes up, I'll just let it take me out. And then that'll be that. Otherwise, I'm going to close it up here in about 5 minutes. I'll just manually exit the position if it doesn't do it for me here in a few minutes.
So how do you manage the trade going through some of those scenarios you just said that okay, your setup is there, everything looks good, you get the volume price analysis, everything correct, and then you get the opposite signal.
Yeah. So there is for lack of a better term, and I know a lot of people don't like it, there's a gambler-esque concept here to playing the market. If there wasn't, I wouldn't need RVR. You know what I mean? If I could just always pick the right direction, I wouldn't know. And they certainly do some tricky things. So this is why it's important as a day trader that you're managing it. And I like to make a poker analogy when it comes to this. For those of you who like to play poker, there's certain hands in poker you're always going to press. There's certain hands in poker you're always going to fold. But it doesn't mean that hand will always work that way, right? You could fold a really horrible hand, and then on the flop, man, I would have been a winner, right? You could push a really good hand, and on the flop, you're a big loser, right? You just base this upon statistics, right? So how often, when you try what you try from the area you're trying from it, how often does that succeed in your favor? If that occurs more often than not, put some risk on it and go. Right, so I run a 4-to-1 risk versus reward metric because basically I can lose 3 trades in a row, and one successful trade, will overcome basically an entire day's loss can be recovered by one successful trade. Right, I won't lose more than 4 trades in one day, so minus 4R, I call it a day, because the assumption there is either I stink or the market stinks. Either way, somebody stinks, and we need to stop the bleed. Right, and then I come back the next day knowing all I need is one good trade to hit, and I'll be completely back up in the game. I'll have all my, everything recovered from yesterday, and then I can kind of keep going and moving. But it's, I actually remember that, Dan P. I actually do remember when Doyle Brunson did that, and it was, literally I wasn't set. It was pretty much statistically one of the worst hands you could possibly ask for, and he decided to push it anyway. I think it was a troll, to be honest, and it still worked. But that was really, but so a lot of what I do is all math based, right? Or statistical based. When I take trades, right? As a 50, I kind of make the assumption, although I am a little bit better than a 50-50 trader, I basically approach this as a 50-50 trader. So if I won as many trades as I lost, what would I need to do in order to continuously make profit month after month after month? What I found is moving to break even, like I did here, just because it's the end of the day, it highly disadvantages most traders. In order to have break even actually be beneficial, you need to run less than a 20% hit rate. What do I mean by that? You take 10 trades. If you're going for 4R and you win 8 of them, and then, or you lose 8 of them, sorry, that's minus 8R, right? R being a multiple of your risk. right? You lose 8 trades, that's minus 8R. You win 2 trades at 4R each, that's 8R, right? So all you have to do, you're just going to get break even, right? If you have a 20% hit rate, you're going for 4 to 1, and you only hit it 20% of the time, that's break even. So that means out of every 100 trades, as long as you hit 20 out of every 100 trades, you're going to be break even. And this is what we call surviving, right? Survive, then thrive, right? Once you can get to that point, you start surviving, you're making regular income, limping by, and then as you improve reading Bookmap and using some of these tools to get the direction of the market more often correctly, then you will see those holds really come to fruition. All of a sudden, you become a 40% trader. Right now, now you're winning 4 trades, losing 6 trades. Well, now you're averaging 10R a week, right? You become a 50% trader. Now you're averaging, now you're averaging easily, 14R to even 20R. You know what I mean? Weekly, mind you. You're talking about excess of 60 to 80R a month. You know what I mean? And this is with losing more trades than you're winning. You know what I mean? If you're managing properly. So, kind of as we start wrapping up our session today, that's the real takeaway here, right? This is what we come from. When you're learning how to trade, you're going to learn it in an order of operations, right? Where, when, and how. It's like surfing. You got to know where to catch a wave before you can catch a wave and then surf it, right? But when it comes to it, the most important part is actually how you surf it when you catch the wave, and then where you catch the wave from, right? And that's what makes trading really difficult, right? Because a lot of us get too obsessed about where we're trying to take it from, not being so much concerned about is it the right time to take it, or how do we manage it, or we manage it poorly, right? So this is another issue with Bookmap, where Bookmap can just be absolutely vital, right? If you are picking the right direction, risk management is going to be considerably easier, right? So if you can see where the institutional orders are, you can see where you're more incentivized to move through these bigger orders, then you can place reasonable trade expectations. You can take 144 or 200 shares of Microsoft and you can make $800 on it after just holding it for a couple of hours. You know what I mean? You can make really reasonable profit doing this, and with tools like Bookmap, you can see where your main seller for the day is going to be, where your main buyer is going to be. You can set those up. I don't trade options, and RVR is significantly more difficult in options due to theta and decay, right? So I am aware of options. Obviously, I just don't personally trade them. If I'm going to go for a contract, I prefer futures. Futures are like options. They're contractually based, right? But unlike options, futures, especially if you're trading like the MES, which is the micro for the ES or the NQ, right? Their expiration periods are 3 months from now, right? So there's very, very little, there's no decay when you're trading futures, right? So yeah, options are hard because they have too many options. You know what I mean? But I do love open interest, and paying attention to areas of high open interest on the options chain for entrance to for instance, to look for areas of high high transactional potential. All right, everybody, I'm gonna go ahead and close this. Going to go ahead and get out of this Microsoft position just because we're 1 minute before the close, and I'm a day trader, so I don't swing and I don't carry positions after the close. I'll carry futures after the close just because futures don't close till 5. But for this, I'm going to go ahead and close out of that. And on that note, I really want to appreciate everybody for coming by and hanging out with me and spending your time. 50, 60 of us, hanging out and talking stocks. I really appreciate that. I did want to say a special thank you again to Bruce and the rest of the staff at Bookmap for having me by to talk about this really awesome program and how amazing, how fundamental it has been in me, really doing some of the best trading of my life has been bolstered significantly by this fantastic program. So I really appreciate everybody. Make sure to give these Bookmap people you love and support their platform and their move, because we need this program. It really helps a lot when we're looking at trying to decipher what's really going on in the market. So we got to keep these people happy so they keep making cool advancements and keep this cool data coming from us because we need it. So again, everybody, thank you so much. Bruce, everybody at Bookmap, thank you so much. And as always, keep it green, people. And thank you for spending time with me.
Excellent. Thank you so much, Thor. It was a real pleasure, and can't wait to have you again.
Cool. Thanks. Yeah, reach out anytime.
Okay. All right. Take care, everybody.
All right, bye.